Hey there. Today we're talking about something that could have a big impact on how much tax you pay when selling investments. Have you heard about the new proposal from Vice President Kamala Harris? She's suggesting a smaller increase to the capital gains tax than what President Biden originally had in mind. Now, I know taxes can sometimes feel like a tricky subject, but stick with me, because understanding this could make a big difference for anyone involved in investing, especially if you're thinking about the long term. So, here's the deal. Right now, when you sell investments and make a profit, like stocks or real estate, you're taxed at a long-term capital gains rate. For most wealthy Americans, that's about 23.8%, which includes a 3.8% tax on investment income. Now, Biden wanted to raise this significantly, almost doubling it to around 44.6%. But Harris? She's proposing something a bit more moderate. Instead, she's suggesting raising it to 28%, plus the investment income tax going up to 5%, so the total would be around 33%. Now, you might be thinking, why does this matter? Well, higher capital gains taxes can sometimes discourage people from selling their investments because, let's face it, no one likes paying more in taxes. So, if Harris's proposal goes through, it could mean that investors, especially those who put money into startups and small businesses, would be more likely to continue investing because the tax hit wouldn't be as heavy as Biden's plan. It's all about striking a balance between encouraging investment and still taxing wealthier individuals at a higher rate. Another interesting aspect of this is how it ties into Harris's broader plan to support small businesses. She's been pretty vocal about the need to create an opportunity economy where everyone has a shot at building wealth, and that includes small business owners. By keeping capital gains taxes lower than Biden's proposal, she's hoping to create an environment where more people are willing to take risks, invest in new businesses, and drive innovation. And here's something that might surprise you. This plan could also mean big changes for people who are looking to start their own businesses. Harris has suggested expanding the startup expense deduction from $5,000 to $50,000. That's huge. For anyone thinking about launching a business, those initial costs can add up quickly, and being able to deduct a larger amount could make it a lot easier to get things off the ground. So then, what's the next step? Well, like most tax proposals, this would still need to get through Congress, and it's not a done deal yet. There's going to be a lot of debate on this, especially since raising the capital gains tax, no matter by how much, can sometimes lead to less risk-taking from investors. Some people might decide to hold on to their investments instead of selling, waiting for a potential future where taxes could be lower again. So, it's a bit of a balancing act. But, you see, this isn't just about taxes. It's about how those taxes influence behavior. Harris is betting that by keeping the increase moderate, she'll encourage more investment in small businesses, which she views as essential to the U.S. economy. And at the same time, she's still making sure that wealthier Americans pay more in taxes than they do now, which aligns with the Democratic platform of taxing wealth at higher rates. Now, I know some of you might be wondering, what does this mean for me personally? Well, if you're someone who invests, especially in stocks or real estate, this could affect the amount of tax you pay when you eventually sell those investments. Even though it's aimed at the wealthiest Americans, tax policies like this can sometimes have ripple effects, so it's definitely something to keep an eye on. What's more, this also connects to some of Harris's other proposals, like ending the federal income tax on tips, or her goal to apply more scrutiny to corporate price gouging. It's all part of her broader plan to lower costs for families while still making sure the wealthiest are contributing more. After all of that, you might be asking yourself, is this the right approach? Should capital gains taxes be raised at all? Or is it better to keep them lower to encourage more investment? Well, there's a lot to consider. And as with most things in tax policy, there's no one-size-fits-all answer. But Harris's proposal definitely marks a shift in how these kinds of policies are being discussed, especially within the Democratic Party. In the end, what happens with this proposal will likely come down to a mix of political negotiation and economic analysis. But one thing's for sure, it's going to have a significant impact on investors, small businesses, and even the broader economy. So, what do you think? Should capital gains taxes go up to fund more public programs? Or do you think they should stay lower to encourage more investment? Let me know in the comments. I'd love to hear your thoughts. And if you found this breakdown helpful, don't forget to like and subscribe for more updates on financial policies and how they could affect you. Thanks for watching, and I'll see you in the next one.